Today, we're going to be talking about pricing and packaging your client advisory service offerings. We talk an awful lot about virtual CFO services. And I think you're going to find a lot of really good information today about the services you offer and then how to price those. I'm going to facilitate the session today. I'm Tom Wadelton. I am a virtual CFO at Summit Virtual CFO by Anders. I also happen to be the host or co-host of the Modern CPA Success Show, and we'll talk about that just in a little bit for one of the tools that we're going to offer you today. All right, I'm joined by two of my peers here. Jake Grimm has been a CFO for a long time. He also leads all of our innovation activities. Jody Grunden, also CFO for a long time, and you'll see in a second, Jody is a co-founder of Summit CPA Group and helps us lead that practice now. So welcome to both of you.
Thanks, Tom.
Okay, a couple of housekeeping things. So one credit is being offered for today's session. We've got a 50-minute session, and you do need to attend the entire thing. I will launch poll questions. I may announce those, I may not, so be watching for those to come through. You do have to answer all three of those. If you do that, we will go ahead and send out the CPE certificates within the mail within the next week via email. And then I'll also let you know, please do use the question function. We want to make this as interactive as we can and answer all the questions that you have. So doing that, we'll be monitoring those and try to fit in all the questions and get everything answered that we can. One of the most common questions that we get is, were there slides that were sent out ahead of time, and can I get these slides? So there were not slides in advance, but we are going to be sending out these slides for your reference to get after for everyone who was part of the session. Okay, I mentioned that I work for Summit Virtual CFO by Anders, so let me tell you just a little bit about our story. Jody and Adam, two partners who formed the firm Summit CPA Group back in 2002, traditional CPA firm with audits and tax work. 20 years ago, started offering CFO and back office accounting services to people. And then more than 10 years ago, went to a fully distributed firm, really the first accounting firm to be completely remote. Opened up a huge amount of flexibility for us for where our clients are located and also where our team is located. And then 2 years ago, we joined Anders CPAs Advisors. Anders is a St. Louis-based accounting firm, and so we are now part of them, and it's now a virtual CFO team as well as the hybrid workforce that we have in place. Okay, Jody, you want to tell us a little bit about how we're going to talk about these topics today?
Yeah, sure. First of all, welcome to everybody. Got a great crowd, it looks like, out there.
Yeah.
Feel free to ask questions throughout. It makes it more enjoyable. So definitely use the question and answer tool if you can. I noticed a couple of familiar faces out there. Shout out to Dwayne, former CFO of ours and now runs a very successful accounting practice. So excited to see you here, Dwayne. With the topics we're going to talk about today, productizing. I'm going to talk a little bit about productizing and pricing, and then I'm going to switch it over to Jake, and he's going to talk a little bit about the marketing and sales process. Then we're going to wrap up with some tools that we kind of created kind of as giveaways to you all to maybe help you further on and help it. Now, the concept that we're going to talk about are going to all be in the framework of what we've done. So a lot of it's, basically, hey, here's what we've done over the past 20 years. Here's what's worked for us. Here's what hasn't worked for us, that sort of thing. So a lot of it's going to be on our experiences. And so I apologize if in advance if you don't want to hear about us, but that's what we're going to be talking about to kind of give you a general idea of what works and what doesn't work. And we hope that you can take a lot of this, or at least some of this, and help your practice grow if you've got a practice, and if not, help you get started with the practice. So, Tom, let's go and get started.
Okay. So first one, productize.
Yeah. So the first step we had to do when we started back in 2002, I realized pretty quickly we didn't want to be a tax practice or an audit practice. We had to figure out pretty quickly how to be able to service clients in a more effective way. And my background was in public accounting. I love public accounting to a point that I just hated all the extra hours and the work and so forth. And so I thought, hey, let's go in the corporate side. Love that as well. That was fun for a little while. Then it became a repetition issue. The nice thing that I learned from the corporate world is that and I worked for a $250 million manufacturing company, is that, they do things a lot differently than what a lot of the small businesses that we are working with in the public accounting world did. And so when we started Summit, back in '02, we thought, hey, how can we do things to change really the way that people think about accounting in general, but how can we do it so that our employees, our clients, and the industry itself looks a little differently at it? And that was kind of our issue there. What can we do to offer a service to a client that is not a product? It's just simply a service. It's billed by the hour. We had to change that thinking methodology. And so the first thing we had to do is identify what our client was going to be. And as a small startup with really hardly any clients at all, maybe just a couple clients, it was really difficult. We had to kind of pick and choose. We couldn't really be picky and choosy on who we brought in. And so we thought, hey, here's the client that we want. We want a service-based business. We want somebody that's familiar with technology. And back then, 20 years ago, you can imagine what the technology looked like. It was basically handheld calculators and big, huge thumb drives and all that kind of stuff. But we had to figure out the technology part. They had to be okay with technology, and they had to be able to listen and be able to work with us. And so in order to do that, we looked at an existing tax client, because we thought, hey, we've got a few of these tax clients who are spending $10,000, $15,000 or whatever it was at that point on our service level. How can we break this down and systemize it and productize it? And so we identified that client. Hey, here's what we want. We want clients that are within this range. Eventually we got to a range where those clients weren't just really anybody and everybody, but they became, clients that we thought, hey, who's going to get the best bang for their buck? Who's actually not truly working in the job, maybe hiring people? And we felt at about that $1 million range is what we thought, hey, this is a perfect client. And we thought, hey, if we can get a client that's $1 million and above, that's great. Now, kind of fast forward, we're at about $2 million and above. So what's a perfect client for us? $2 million to maybe $20 million. Average client being right now, I think it's around about $5 million. Jake, does that sound about right on the average client? So we as you can kind of tell from the very beginning, that identifying that client kind of shifted and morphed over time. So what I'm saying with that is your ideal client may not be our ideal client, and that's cool. And you just have to make sure that you really work with that and you focus your service so that you're going to create based on that. Frequency was another thing that we had to determine. How often are we going to meet with these clients? Are we going to meet with them on a monthly basis, a quarterly basis, an annual basis? Well, we took it one step further and said, you know what? Our clients initially started off, we met with them monthly, and they thought this is great. They loved it. But then they asked, hey, is it possible we can meet you with you more often? Or can you make yourself available more often? And we thought, wow, if you make yourself available more often, that's going to really, that'll disrupt everything, because we're going to get phone calls galore all over the place. It's going to be a continuous thing. And it was one of those things that, hey, we didn't want that either, because that would be we'd be putting out fires on a daily basis. So we had to figure out, hey, what's the frequency we wanted to meet with those clients? Is it 1 to 4 times a month? Is it 1 to 6 times a month? Is it, on a weekly basis? Is it bi-weekly basis? And what we came up with is kind of like an a la carte or an adventure for our clients, and said, you know what, if you want to meet with us on a monthly basis, great. We'll meet with you on a monthly basis, not a problem at all. If you want to meet with us on a weekly basis, which we found about 50% of our clients wanted to meet with us weekly, we thought that's great as well. We can meet with them on a weekly basis. Some clients said, you know what, we don't need to meet with you weekly, but maybe three times a month it'd be perfect. And so we thought, hey, that's great too. Let's customize our service based on the frequency there. And then we found out when we did that, the clients actually attended meetings, and the meetings were more effective because it was a consistent process being put in front of the client. And we found out the clients were actually more successful in the long run, which was the whole aim of the virtual CFO practice, is really giving a service to a firm that really, or a client that really couldn't afford it, that the big companies were actually doing on a regular basis. The manufacturing company I work with, we had an entire staff of folks giving CFO services and so forth to our own company, helping them grow and expand. Whereas a small business owner didn't have that option, and that's what we were bringing to them. So the nice thing, it really did develop that consistency and really help the clients there. The third thing was the scope issue. A lot of people are afraid, hey, what's the scope issue here? How can we define our scope? And we found that was really important from the beginning. And we'll share that with you as we go through how we define the scope. But it was important for not only the client to understand the scope, but it was important for our team to understand the scope. And that was a big thing from the very beginning. We understood it, the client didn't understand it, the client understood it, we didn't understand it. That was a mixed match. And so what we had to do is we had to define what that scope was and make it super easy for the client to understand what it is. Because you could tell somebody, hey, we're not going to do taxes for you, but we'll do payroll. And then all of a sudden they think, well, you said you weren't going to do payroll taxes, but does payroll taxes include income taxes? What's the difference? You said one versus the other. They didn't quite understand, because again, that's not what their job was. Their job is to run the best plumbing, company in the world type of thing. And so we have to really define scopes so that they understand completely what that scope is. And we'll show you how we defined it through our process here. So productizing was super important. We laid out 3. If you want to go to the next screen there for me.
I will.
Tom.
And Jody, in doing this, I'm wanting to launch the next poll, or the poll question, having trouble with the poll question. So here's what I want people to do. In the Q&A answer, tell us the number of people in your either firm or company that's in there. So if you will, we'll go ahead and monitor that. And then Jody, go ahead with the services that we offer.
And you don't need exact, you just need roughly.
Right. Yep.
Rough,
Kind of rough. How many people do you have in the firm? We'll get an idea of what the size of the people that we have here.
Okay, cool. And that will put towards their certificate, and there'll be no issues there for them there.
Right.
Okay, perfect.
Right.
Okay, so in talking about the productizing here, kind of see we put this under 3 different areas here. We called it transactional, controller, and virtual CFO. Those are our 3 different line items or levels of service that we were going to offer a client. And what was that going to be? That was going to be, that was going to be on a transactional, maybe once a month. On a controller, maybe twice a month. On a virtual CFO, maybe 4 to 6 times a month, or 3 to 6 times a month, or whatever that might be. But it basically put it into the buckets, the level of services. And then we also decided, hey, a transactional service, we're going to define this a little differently. And the transactional is going to be historical only. So we're only going to talk about the financial statements, and that's it. We're not going to really get into forecasting. We're not getting really anything outside of that. It was just going to be a traditional accounting firm provides a client. But in addition to that, we're going to meet with the client every month to go over it. So the monthly meeting was always included. What we decided under the controllership model was, hey, and again, this could be called red, yellow, green, or gold, bronze, silver. It doesn't make a difference. We called it controller. And so in the controllership model, we decided, hey, this is a meeting with a client 2 times a month. And in those meetings, we're going to talk not only about the historical stuff and the KPIs and everything that goes with it, but we're going to talk about the forecasting stuff, the forward-looking stuff. And that was what clients really came to us for, was that forward-looking concept. And that's what the virtual CFO service is all about, is forward-looking, not really in the rear of your mirror looking. And so the controller was between, again, 2 times a month. The virtual CFO was kind of the all in. That's kind of the Netflix version of what we offer, where really it's unlimited. And we decided to make it, hey, we're going to meet with the client 3 to 6 times a month. If they want to go less, we can go less. If they want to go a little bit more, we can go more. And we'll include that in the pricing structure. But we're going to make that so that it's completely there, because it's really strategic in nature. If they want to do a profit sharing plan, if we need help with a phantom stock option, whatever it might be, we're going to be that conduit to a third-party service provider that can do it better than us, or we're going to help them do it ourselves. We're going to be the quarterback here. We're going to be in the meetings. We're going to hear everything. It's going to be more strategic. And that was what we called the virtual CFO service. And so we've got 3 defined buckets that we put them in. Now, as you notice there's no accounting in any of those buckets. And so what we did there is we made accounting, its own little a la carte options there. So if a client wanted us to do bank recs, boom, in any one of these services, we can do bank recs for them. If they wanted us to do bill pay in any one of these services, we could do bill pay, accounts receivable, credit card reconciliation, spend management. We could do really anything that they wanted us to do in the accounting side, and we bucketed it out, made it very clear on what that was, and adding it to the service line there. And then also you can see taxes. Do we do taxes? Not all firms on this call are going to do taxes, which is perfectly fine. We did taxes, which made it really simple. And so we a la carte taxes as well. Are we going to do corporate taxes? Are we going to do individual taxes, personal property tax, sales tax? We a la carte that out because not every client wanted the same venture. And so that was the whole idea, creating that new adventure for every single client on the call and making it different. So if I'm quoting, I'm quoting Tom owns a business. It's going to be a completely different quote than I'm quoting Jake, who owns a different business altogether. And then the other thing we did was we scaled it based on size. We found that initially that was one of the faults we had is, hey, it was more of a flat fee structure is what you're looking at here is flat fee because every client every client we charged the same thing to. And we found that we were working on $10 million clients a lot more than what we were working on $1 million client. There was a lot more that they needed that $1 million client didn't need. And so with that, we decided to scale ours based on revenue size and employee count. And those were the two scaling factors that we thought, hey, this is going to really help us determine or help us set a $1 million client's price versus a $10 million client in a proportional manner there. And we based it based on revenue size. And you can do that with a lot of service-based companies. You can base on revenue size. Construction companies, you can base on revenue size. There's a lot of companies you can do that. Trucking companies, another vertical we went into, you really can't do it on revenue size. You got to do it on other factors. You maybe cannabis may be something different. So you may have different drivers for your industry. Nonprofit being the perfect thing. It may be based on something completely different than revenue. And so it's important to understand what the driver is for your industry and then scale that based on that driver. So if you know that a nonprofit that has only one or two opportunities versus 100 opportunities, it's going to be a lot different. A lot different dollar amounts there. And so scaling for us was based on revenue because we dealt with 90% of our clients from that service-based industry.
Jody,
yeah.
If I might add just a couple of things in here,
Mm-hmm.
we get a lot of comments about that unlimited
Mm-hmm.
comment. And what I would say is you talked about identifying the scope, which is important in the engagement letter. If you're worried about unlimited, oh my gosh, this client's going to ask for too much. And then also one of the things we do is set boundaries with clients. And it can be things like if you're getting a ton of messages asking for responses, you may say, hey, why don't we have a meeting once per week and we'll just sit down and answer these. And we found that to be a really effective way to kind of manage scope. So if that's a concern, there's some really good ways you can manage. But we have clients who love that idea of, okay, you'll take care of what I need, which is what a CFO would do inside an organization.
Yeah, I mean that's a great point, Tom. When you look at it, and we very rarely have an issue with unlimited,
Right.
very rarely, because clients, no different than a CFO that's on staff, they're going to continue asking questions. You're going to be working with them all the time. With us, the same thing, but we're bundling things up. So we've got meetings that these clients are coming to. We've got defined meetings, and we'll talk about that here in a second. That hey, we got a financial statement meeting, a forecasting meeting, maybe a pipeline meeting, whatever that might be, and they bring their questions to that meeting. So it very rarely comes into an issue that we do that. And Jake's going to emphasize a little bit that we're always looking for that 75% contribution margin, net contribution margin on a client, 75% profit, 25% total cost. And so we typically don't see that, and then when we do see it, we actually make adjustments for it.
I was going to say the one thing that popped out to me on that last slide too, just to call out that resonates with me that Jody mentioned was like industry focus too. And I'm going to talk a little bit about that in marketing, but a lot of those different items down below that we call out as included with virtual CFO service, we've found those different topics over time working with clients, especially around, certain industries that we really focus in. And so as we kind of get this material out on our website and kind of knowing that these are the questions that our clients are bringing us, incentive plans, department performance, whatever that is, we've kind of learned that these are the hot topic items that, clients in this industry are really focused on, are really keen about understanding. And that's how we kind of came up with some of those items that we wanted to list on here as included as part of our advisory services, that we understand what they're talking about. And we've had those conversations with a lot of other companies similar to them.
Yep.
And so this is a chart that I like that it kind of walks back to what I discussed before. So we've got the three different buckets: transactional, controller, and CFO. And so that's the level of service we're providing. Is it reactive in nature? That's transactional. Is it proactive? Controller, because you're not in all the meetings with the client. You're hearing a lot of things secondhand. A lot of times after the fact, 2 weeks before, hey, we did this 2 weeks ago. How is this going to impact our forecast? We hear that a lot. I mean, Tom, you can contest to that one.
Sure.
Virtual CFO, we're actually strategic because we're involved in those discussions. That's the big difference there. Strategic in the nature that a lot of times they ask us before they actually do it. Now, they don't do that all the time, but a lot of times we're part of the discussion on how that's going to really impact them on a financial basis. So you've got going up and down, we've got the transactional controller and virtual CFO. And then as you see going across, we've got the added features of advisory, which we already talked about, accounting. What accounting things do we do? Not just one. There's a checkbox for each one of those. We could do one or all. For instance, accounts receivable, we do that for 10% of our clients tops. And we always tell a client, if we're going to screw up, Mr. Client, here's where we're going to screw up, and here's why. Because invoicing is such a really easy part for us to screw up, because you have the intrinsic knowledge we don't have. And with that, in order for you to do this, we have to actually set this up. So here's our processes, and you've got to be able to stay with our processes. If you're okay with our processes, then hey, we're good with that and we can do it. But if not, then that's something that will probably have to be continued done in-house. Payroll administration is the same way. We let them know, hey, if we're going to screw up again, it's going to be payroll or in accounts receivable, and we don't want to do either one unless you follow our processes to the T on that one there.
Yeah. And to your point there, I mean, that mistakes happen. Those are definitely the two areas that you really can't afford mistakes, right? Piss off your customers or pay the employees wrong, and those are the big ones. So those are ones where we say, hey, you really either have to have tight processes or do that on yourself, right?
Yeah, that's exactly right.
Yeah. Okay, so if we move over and talk a little bit about pricing then.
Yeah, let's do it. So with pricing, again, when we first came up, we started out hourly. For the first 2 years in business, we did everything that the traditional accounting firm did. And what we found ourselves doing is during these calls, that's what we were talking about a lot of times, our bill. And so our bill was there. We're talking about it. We're explaining it. We're justifying it. And it was super tough. I can't remember how many times that I've spent a ton of time calculating a bill, think the client's gonna be super happy and the client's upset about it. And then the opposite happens. I think the client's going to be like, oh, this is too much. And they're like, oh, I can't believe it's that cheap. And so it was like I could never read the client on what they thought the bill was going to be. And keep in mind, this isn't a tax return and meet the client again next year. This is talking with this client on a regular monthly, weekly basis. And so we had to come up with a different structure. And so part of that was the flat fee. We thought, hey, flat fee, let's just charge everybody $1,500 a week and call it a day. Well, we found out pretty quickly that was pretty high for some clients and not high enough for others. And so we had to figure out, hey, how can we make this more of value-based? And when I say value-based, there's a lot of definitions, but I don't mean, hey, here's how much we're going to save for the client. When we did value-based, what we did, and we'll talk about this in how we actually structure the pricing when Jake goes through it. But we talked about, hey, here's how we're going to actually take instead of hiring a tax person, a CFO, a controller, all these different people that are going to be part of this group that a typical, large company and maybe a $10 million company needs or $15 million company needs, we're going to do fractionalizing it. We're going to say, hey, you're going to really need a quarter of a controller. You're going to need a lot of the accounting because you want counting to be in this thing. You're going to need a tax person and so forth. And so we fractionalized everything and then come up with our value base. And so we're looking at value base, looking at the replacement of the people that we're actually to hire. So if you've got a job and you're charging $90,000 for the average client, and you think, well, I can get a CFO for 120. Why would I do that? Well, a CFO is typically not going to do the work of an accountant, a bookkeeper, and all that kind of stuff, where you can kind of combine all that together. And so that's what we call value-based. Retainer is another method. We've really done. We don't really use retainer and haven't really used that at all. But all these things really migrated to what we call subscription-based billing, and we created that back in 2007. So we've been using it for a long time. And with subscription-based billing, what we're doing in effect is we are taking the client's needs and wants, and we outline the different, transactional, controller, and CFO. We're identifying that. We're identifying the different service levels, and then we're scaling it again based on revenue and employee count. That's the key there. That's what takes it from basically from a value based, from a flat fee to a value base, and creating it under the subscription based model there. And then we're simply spreading that dollar amount over a weekly fee. And so our weekly fee, we zap everybody's accounts every Monday for whatever our average, whatever the fee is, we come up in the calculation, and we hit that every Monday. Just zap their account. We don't send invoices out to clients. It's just like any other subscription-based billing model. And the nice thing about it is, for them, they can cancel anytime they want. So they get it within 3 weeks, 6 weeks, 2 months, and they're saying, you know what, you guys are not even near what you promised. I'm going to cancel my service. They have that right to cancel that service, which is nice, because what it does, it keeps us on our toes and makes sure that, hey, we're providing the best level of service that we can to that client all the time. It doesn't allow us to slip up and slack off and say, oh, we're in busy season, so we're not going to contact you anymore.
Yeah.
It forced us to really be, on that client's team there, which is nice. And our average client stays with us for about 4.5 years. And we've got many, many clients that have stayed with us, 10, 15, 20 years, just because of that stickiness that we create in that relationship. But we always give them the out, hey, just like an employee, if you ever decide you don't want to work with us, let us know, and your weekly fee stops at that point. And I do say weekly fee because all of our clients are on a weekly fee basis. We don't have anything on a monthly or quarterly or anything like that. Everything's done on a weekly basis there. Now, the nice thing about that it gives you that continuity, like I mentioned before, where the billing is done automatically. Everything is done where the client understands it. You're in a weekly cash meeting with the client. Maybe they're struggling a little bit cash flow. Your invoice isn't the first thing that's staring them in the face. And as a CFO, you're like, you can push ours off till next week. You've got to get these main things done, which we did. And I was guilty of it myself when I was doing it way back when. And then once we made it where it's automatic, comes out, it's not even a conversation point, and then we're talking the real talk. The other thing is that continuity allowed us for the client to actually show up at the meetings, because when they got behind on their invoicing, they started not showing up at the meetings because they were embarrassed. And so what it did, again, it kept everything on pace. We were never behind. They were never behind. We were truly helping them out in any relationship that an employer would have with a client there. Transparency, super important. As we'll show you how we do our quoting, our pricing structure there, transparency was key there. So we actually quote and price everything on that 1 hour sales call. So it makes it really nice. Client sees exactly how much it's cost. We don't go back and give a deal in our closet, come back later and come up and say, hey, here's how much it costs. So everything is done right there, and it's super transparent. Nice thing about that is that as scope changes, because again, scope does change, the client, the CFO can bring our pricing model back up to the client and say, hey, here's what we agreed on. Here's the new agreement. Everybody okay with it? High five, and now we're off and running on the next week. So transparency is really nice. They can see it. They understand how it works. Again, it's not in a black box. Control, again, that's obvious. That's the obvious thing. We've got control over really everything. Control over time, control over pricing, control over everything that it entails with the subscription base. We understand what's going on there. The best thing about it is on the accounting side, obviously, is you got no AR. So we built a $12 million practice with no AR, which is kind of cool. With that, as we merged into the larger Anders, a $50-70 million accounting firm, when you see their AR, it's like, oh my gosh, that's bigger than our company at some points. And it's like, with that, that's kind of a nice thing that we've never really had that issue. We've never been to the bank for a client because we couldn't afford to back then. When we bootstrapped the company, Adam and I, we just couldn't afford to be a bank, and so we had to stop at that point and figure that out. That's where the subscription-based model came into play, and it gave us control over really everything that we could within our practice, and just made things go much, much better.
Yeah. So I'm going to go ahead and launch the next question. So if you'll look in the question function, you'll see the question out there. Jody, you're probably not surprised from the first question. The majority of the people here today are less than probably 20-person firms. Sure. We had someone that had 100 with 25 in their advisory practice, someone else who said 300 in there, but most are kind of in that really good range of size. But the next question's posted for people to answer now.
Yeah, and so I hope I'm answering the questions as a 1 to 2 person firm as well as a 300-person firm, because with that, the idea is that it's translatable to any organization size, which is the really key to that. Key points here that we talked about would be unlimited service. Don't be afraid of the unlimited service. We provide that at the highest level, and with that, our margins on the highest, our highest level is still at that 75% contribution, as it is on the transactional, the more restricted version at 75%. So again, we don't see the big, their clients kill us. I'm going to drop down to week 3 real quick here. Accept win some, lose some is a key concept. And it was really tough for when we merged with with the larger accounting firm, is that, they're looking at our thing and they're looking at our profit margins and they're saying, well, yeah, your average is 75%, but you got these 6 clients down here that are at 50%. Are you just going to increase their prices to get them up? And it's like, no, can't really do that. We've already agreed on here's how the structure works and here's how we're doing it. But what we can do is we can figure out how to get those clients up through innovation and efficiencies. And that's a really important thing. Maybe we're looking at it and we're saying, oh, scope happened, but it was never charged for. Maybe we need to look at that. Maybe we need to push some things back onto the client responsibilities. Hey, the AR that we're looking at, you're really out of bounds on a lot of this. I'm going to push that back to you, Mrs. Client, and I need you to figure out how to figure that out and work with that. And so there's ways around bringing those margins back up without simply changing the price, because you really can't do that in a subscription-based model, or you shouldn't do that. It shouldn't be one of your standards. And the same goes with the 90% margins. We got tons more clients with a 90% margin. Right. That doesn't mean we go to them and say, hey, we're going to lower your price to 75%. That doesn't work. It doesn't work that way either. So with that, you need to find out what your margin needs to be, 75%, or maybe you're 72% or 70%. Ours is 75%, and that makes the world go around from us. It's basically a 4-to-1, very similar to an hourly billing model if you back into the results that you get from that with really no write downs. So with that, that's,
hey, Jody.
Yeah.
Sorry, I saw one question that kind of fed perfectly into this number 3, the win some, lose some. When we bring on, the question was, when we bring a client on late in a year on subscription, do we make any adjustments for annual items like a tax return so you're not upside down? My thought, and I'm definitely curious, Tom and Jody, your guys' thoughts too, but I'd say for the most part, no, we don't make adjustments. If we bring on someone in August, September, I think we're going to go ahead and just, say that this is included in your service. We'll do your tax return, knowing that, hey, there might be only the weekly fees here for half the year instead of a full year. Kind of back to that win some, lose some. We want to just kind of get that relationship, get that client in the door. I'd say our caveat to that definitely comes into play right around, fourth quarter and getting into the new year. If somebody is signing up with us in December, January, February, we're usually pretty clear then at that point, hey, you're signing up January 25, so this includes your tax return for 25. If you want us to do your tax return for 24, it's going to be X amount to do that for last year. So I think that's where that kind of comes into play. Once again, usually valuing getting that client in the door and that client relationship starting off on a good seat is kind of typically how we approach that. But definitely curious, Tom and Jody, your thoughts too.
I've done that several times, Jake. Just like you said, someone comes on in February and says, hey, would you do my taxes for last year? And the clients have been very open. We can price that and say, we didn't charge you for that. So if you would like to, I'm not trying to push you to do it or not. And probably 3/4 of the time, they'll ask us to go ahead and do that. And then we'll say, of course, this year's taxes, as we're already working on, that's included in your fee.
Mm-hmm. Yeah, and keep in mind, the idea is that if you're working with a client on a weekly basis, all the stuff that takes the hardest time to do a tax return is already done by the end of the year, and so it just makes it so much easier to just simply do a tax return. Tax returns are fairly simple to do at that point because everything is buttoned up. So there should be no year-end journal entries being made because it should be made throughout the entire year. It should be a really solid financial statement going into that next year. So yeah, you're right. When it gets in that third quarter, we talk about that, and if the client wants us to go back and do prior year tax returns or whatever, that's an additional fee. If they want us to clean up prior year stuff, that's also an additional fee, and we charge that through onboarding. If the clients want us to do a conversion in software, something like that, right at the very beginning of the deal, that's also an additional fee, and we charge for that. And so we do that through our onboarding process. And our onboarding process takes between 6 to 8 weeks. Well, actually takes, I would say, between 4 to maybe 12 weeks to actually do the onboarding. It really depends on on what we're actually doing. If we're doing payables or receivables, or if we're just simply doing the forecasting and the consulting. There's a big variance there. So with that, we always double our fee in those first 6 to 8 weeks based on what the demand is, and that way it covers the extra time that we've got allocated and getting things set up and getting things going. So if it's a $1,500 a week client, we're going to charge $3,000 a week for the first 7 to 8 weeks, and then from there it goes to the regular fee after that. Keep in mind, as we've grown over time, and we'll talk about this, our average client right now is about $90,000. So it varies every year, but it ends up at 95. When we first started off, it was a lot lower, and now it's moved up to about $90,000 for the service there, and that gets us that 75% contribution margin. Now we do have clients that are significantly more than that, more than double that, and we've got clients that are significantly less than that. Between $30,000 and $40,000 would be a very small client, and then it goes up. What we want to do is we want to make sure we don't get stuck into that really small client where we're actually spending a lot more time, a lot more energy, and we need a lot more person power in order to actually get that done. So that's the big thing on the win some, lose some. Can you go back one more real quick? I want to look at the last ones, manager margins, minor KPIs. Yeah, so manager margins, with that, we're looking at the margins every single year. Jake, and if you want to tell us about the process that we're actually doing right now, that'd be pretty helpful.
Evan asked kind of the same question, how often do we look at adjusting our pricing for inflation, et cetera? And at least every year we're going through that analysis for our clients and determining, one, for our existing clients, how should their fees change for the next year at a certain percentage point, and then how do we want to adjust our pricing calculator for those adjustments. And our methodology is we'll look at the trailing 12-month average of contribution margin or job profit across all of our clients and look for the ones that are having issues that are lower than what we would like it to be, look for those outliers. And then we really dive into the services that client has signed up for and determining if we're maybe underpricing, a certain key point. Maybe payroll processing is taking us a lot more time. We're losing things there. It's a very delicate process. Maybe we're just not considering the value that is being delivered for that service correctly. And that's something we need to go back and look at. So that's our kind of the main methodology there is we'll really break down all of our clients, look at the job profitability, look for those outliers, also a little bit on the top end, see what's going well for clients and how can we get other clients to kind of move in that direction. And that's how we then determine how we want to adjust prices. And we can also then model out, like if we change the pricing of this service offering, what would that, assuming costs, roughly stay the same, our time stays the same on a client, what would that have meant for the job margin, the job profit, if they were being charged X amount instead of Y? And that helps us determine, if we're on the right track on how we want to adjust our pricing for the next year.
Yeah, and to number 5's point, monitoring the KPIs, our KPIs are not utilization average bill rate, which what a typical CPA firm would be. Our KPIs would be job profit margin. Is our jobs at 75% contribution margin? Is our gross profit 50%? Is our bottom line, close to 25%? Those are the big KPIs that we're looking at there. On the win losses, we're looking at, hey, what's the average client size that we're picking up and the frequency we're picking those clients up. And we're also looking at, the our win ratio based on those. And so the idea is, hey, we want to maintain a 30 to 40% win ratio. We want our average client to fall between $75,000 to $90,000 a year roughly. And then we want to be able to pick up based on growth. We want to pick up in this year, we want to pick up 3 to I think 6 clients a month is what our average client pickup wants to be. The other one that's the hidden thing that if you don't track, you'll really kick yourself in the butt is client retention. You want your client retention to be greater than that 90%. So, client retention under 90%, you need to look for reasons why it happened that way, and bring it up. But you want ideally a good client retention. We were at a client retention probably about 3 to 4 years of about 94%. And so if you can maintain that 94% margin, you're doing well. Clients are leaving for the right reasons and not for poor performance reasons. They're leaving because you got them that next level. They're now selling the company or they're passing it down, or maybe they're hiring an internal person because they got so big that they need to have that internal person on board. All the right reasons is why you want the contribution or the retention ratios to be at that 94% rate.
Yeah. And Jody, as we change this, we did have a question from Jenna asking if we track time. And Jenna, we do. That does help us calculate client profitability. And that's something that we use internally to do that. And so that's the main reason that we're tracking our time to client work.
Yeah, and we don't bill by the hour, but we do track by the hour. And the key there is everybody's like, well, do people really give you honest hours, all that kind of stuff? We find that we do because we don't penalize people for not. I mean, so we just want to make sure they got their time in there and they are tracking it well. If we do see that maybe a client's margin, because we'll take the exact cost, our exact employee cost there to come up with our margins there. So that's built into it. So if we're seeing that, hey, our margins are slipping on XYZ company, then we'll dive into it and figure out why we may have them track their time a little differently so we can figure out exactly where we're falling short on it. Maybe it's the accounts payable side, the cash flow. Maybe we're spending too much on the consulting side, or not too much, but an abnormal amount on the consulting side. Maybe it's a one-time project that just kind of threw that margin off for the last 2 months, but over the year it's looking great. So we do look at time, really important. The only way that I could figure out how to getting rid of time is to have a completely outsourced accounting team. And if we had that, then we probably wouldn't need to track time, but we don't have that. All of our employees are truly employees, and we've got about 75 of those folks all across the nation.
Yeah, and to your point, Jody, often what we're finding when we have lower profitability on clients, it's the CFO and the senior accountant are spending more time doing tasks that they should be delegating. And so you look and go, yeah, the CFO is spending way too much time, and they dig in, and I'm spending time in spreadsheets, I'm spending time doing all this, and I'm an expensive resource compared to being able to push that to someone else to do.
That's exactly right. And that kind of leads right into this last slide that I'll be talking about today, and that's the pricing based on demand. To come up with our pricing, when we initially priced our service, we found that we picked up a lot of small clients, and we picked up a lot of them, and our closing ratio was like 80% or above, and we were high-fiving. It was great. It was like we could pick up a client every time we talked to him on a call. And then we found out pretty quickly that we didn't really have the capacity in our team to service these clients. And so we had to figure out, hey, what's a good balance there? And that's when we started playing with the supply and demand there, the increasing the price until the demand dropped off a little bit there. And so economics 101 type of thing. And so we kept increasing our price. Our closing ratios started decreasing, and we found that we were at about that 30% to 40% closing ratio. We found that was at the capacity our team could truly handle. And so we developed we did that, and so when we're juggling our pricing every year, we're looking at our closing ratio. How's our closing ratio doing? Oh, it's at 25% this year. Well, then maybe our price is too low. Let's not increase it that much. Or other way around. Hey, our closing ratio are 50 to 60%. Will we then increase a little bit more to make it down? Because our goal with our philosophy is that, hey, we want a small amount of clients at a bigger fee, and that's what we've done. So we developed basically a $12.5, $13 million practice with less than 200 clients, and so that's a pretty cool thing. So we don't have thousands of clients. We have only about 200 and some, maybe just under 200 clients to be able to service that 12.5, which allows us to be able to maintain all the ratios that you look at on being a healthy accounting firm or consulting practice.
Yeah. Okay, let's go ahead and move on to marketing, and I will go ahead and launch the next question related to subscription-based pricing. But Jake, you want to talk about these?
Yeah, thanks, Tom. Marketing for us, as Jody kind of mentioned early on in the productized section, we really found over time that really aligning ourselves with certain industries and thought leadership from a positioning standpoint is what really put us on an accelerated growth path and allowed us to be, what we said we were, really good advisors, business advisors for our clients. It just makes a big difference for the clients that we work on when we can say, hey, we work with 30, 40 other companies inside of your same industry. We can talk in the exact same terms that client is talking in. We just really can, understand what issues a client has going on. And they also know that when they come to us that, we have a lot of other CFOs that are working with, with clients that have the exact same issues that they might be experiencing. So not only are they, signing up for, our subscription model and getting, Tom as a CFO and someone as a senior accountant, but they also know Tom has this, wealth of other CFOs that he is talking with constantly about like, hey, client asked me this question, have you guys seen this in your other clients? And just those sort of things is really where we find a lot of value add for our clients. And that's where we really focus on. As Jody mentioned, not everything that we necessarily went down might be the best for you, but we found that for us, that bottom left one there, thought leadership, and really putting ourselves in alignment with key industries that we want to focus on, has really enabled the team to be, really good at delivering our services. And it's also made us, never have an issue with, clients coming in the door that we need to quote. We just always have the demand coming in for the services that we're offering. I would also then touch on, the last thing on that one is a good mixture of that inbound and outbound marketing definitely can be helpful. Once again, just leveraging the material that you're putting out there. The main areas that we really focus on, we do obviously a lot of podcasts, a lot of webinars, do a lot of articles, and a lot of speaking engagements, really trying to figure out the industry specific conferences that our, target clients are attending and getting information from, and trying to be at those conferences to get in front of those prospective clients, and ideally speaking at those, and not really necessarily speaking from like a really hard sales approach, but really about a soft delivery of like, these are the things that you should be focusing on for your business. Have you thought about doing this? Have you thought about doing that? Here are the KPIs that you should be tracking for your business, those sort of things. And a lot of times those business owners, they're gonna be like, aha, yes, I should be tracking that. I don't necessarily know exactly how I can do that, or if I even have the time to do that. Let's go talk to this company that clearly knows how to do it and see if they can help us out. And I think that's one of the big ways that we kind of position our firm and how we try to bring in clients.
Yeah, Jake, I completely agree that the thought leadership side, that was really key for us. I mean, because we started creating a demand for us. And so that was the big thing. And so it didn't happen overnight. So it's a long game approach. It's going to take a year-ish, maybe even more to create this thought leadership. But it's very, very worth it. And so how do you supplement your time in there? Well, you do email marketing campaigns. You do more direct approaches to really kind of drive businesses there. You look inside your current, existing client base and start marketing to them, introducing this concept to them. Again, it's a new concept. Those clients would rather buy from you than somebody they don't know and understand. And the bad thing is we get clients all the time that come to us and they'll say, hey, you know what, we love our tax account and our account. We've been with them for years. But you know what, even though you guys are like $80,000 more than what they're charging for their stuff, you guys understand us, know us. We're going to go with you guys because this is the path that we want to go going forward. And it's not because and when you sit back, it's not because that their accountant, their tax accountant, whatever, couldn't do what we're doing, because they all could. It's just a matter of that's what we do and that's what we focus on, that's what we market towards. And so I would say a big opportunity with your current client base is there. Look for the clients that you think may be interested in this type of service, and just kind of soft play it to them, explain to them, maybe offer a couple things to them just so they get an idea how it works. Also, Jake pointed out the thought leadership is not get into a booth and sell on virtual CFO services. It's go to a conference, mix and mingle with folks. It's actually maybe doing a presentation like Jake had mentioned and talking about and educating clients, not talking about the virtual CFO service process itself. I never talk about that when I'm at a client. When I'm at a show, I'm always talking about, like Jake said, here's how you forecast. Here's the profit margin. Here are the KPIs you need. We're talking about different things that clients can actually, or prospects can actually look and utilize in their practice. The key is there, if you can educate them and 10% of them figure it out by themselves, high five, that's awesome. You did your job. The other 90% at some point will not be able to, and they'll look towards you or somebody else for that service level. Why not you if you put yourself out there as that person?
Yeah. Let me go ahead and move on, and we've got about 5 minutes left.
Okay, I'll try to breeze through. I mean, as Jody just mentioned, here's the thought leadership ways that we kind of tackle items, articles, blogs, podcasts, social media, speaking engagements, etc. And then on the right, some of the different tools that we use inside of our, specifically inside of our marketing and sales departments, different things that we're using to help deliver our services. I know one thing on here that I think kind of also popped in a question earlier is project management software. There at the very bottom, ClickUp. Both from the marketing and sales team, but also our accounting team, advisory team. That's the platform that we use to manage all the tasks that we need to deliver for clients or any tasks or projects that we're working through. So moving on to the sales cycle, we have a 6-step sales cycle. The first 3, capturing the leads, going through a 1-hour sales consultation, and the client picks a service package. So, when we go through that 1-hour consultation, the first 20 or 30 minutes, Jody is just asking, or whoever it is, Jody, Adam, Tom, whoever is just asking questions of that business owner. What are the pain points? Why are they reaching out? What areas are they looking for? That way we can kind of behind the scenes a little bit start self-diagnosing, the things that we think that they should be, especially from a subscription level. Are they really asking questions that are gearing towards a virtual CFO area? Like, we kind of know that this is the package that this client needs. Or are they, pretty hands off? They have things in a really good process. Maybe they just need some industry expertise, for us to kind of come in and see what they're doing. Maybe they only need a monthly, the transactional level kind of service. We're kind of based on the questions that we're asking and the answers that they're giving us, we can kind of pretty easily, what kind of subscription level that they need to be signing up with. And then from there is when we move into the a la carte side of things of, do you need us to do bank recs, credit card recs? Do you need us to process bills, et cetera? You can kind of switch to the next slide here, Tom.
Yep.
But, our pricing guide and calculator, which we'll kind of talk about here, very high level. I'll try to breeze through quickly is, we pull that up right in front of the client on the call, where they can select the different service offerings and, see the price changing for them as they go through it. The way that we determine the prices for each of the different items is, as Jody mentioned early on, knowing what our cost is, knowing what our break even is for the team, factoring that into a contribution margin, and then from there, factoring in a complexity factor and a value-based adjustment. So complexity, a lot of times it could be based on revenue, as Jody mentioned, or if it's payroll, maybe it's the number of employees, and then what's some of the different value-based adjustments that could be playing in, and that's what then helps us determine the price. And so one of the tools, I know Tom's going to kind of wrap us up here shortly, that he's going to talk about is this next page, is this free price development worksheet. This is kind of an example of like what we go through for all the different service lines that we have on our pricing calculator. Throwing in our break even, what that margin percent is, comes up with the base fee, and then based on complexity factor and the revenue, value-based adjustment, how does that then change the overall price up to what we want to charge on a weekly basis for that service offering? And then on the next slide, Tom, when we actually get into the actual pricing calculator, what this looks like in front of the client is, in this very specific example, you can kind of see in the grayed out, we have maybe 20 line items of different service offerings, but all the client needs to decide on, like, we're asking questions that anyone that we're talking to should be able to answer. Hey, do you want us to do accounts payable? Just give us a range on the number of transactions that you have. Is it low, medium, high? They're usually pretty honest of what that's going to look like. How many companies, that's what that quantity is. How many companies do you need us to do AP for? If they're a multi-entity company. And then just a simple yes, no. Like, yes, I want you to do AP. No, I don't. And then behind the scenes, we have the pricing of what that looks like for AP on a weekly basis based on, what they select.
And that's an example of that complexity factor that you talked about, right? This low, medium, high.
Yep, exactly. So as they go through it, and I know it's hard to see at the very bottom here, but the client's turning things on, yes or no. They may have a couple different scenarios, yep, and they'll be able to see right then and there like what that weekly fee is going to be based on all the different things that they're turning on or off. So yeah, I think that's probably the biggest thing there. I know we're kind of getting near the end of time here. Sure. Kind of just wrapping up the sales process. As soon as the client picks the service package, we're sending out the formal engagement letter and the statement of work. Hopefully they're signing and then we're kicking it off. We're starting our onboarding process. And then some of our tech stack from the biz dev areas, Calendly, Zoom, definitely some of the biggest things there. Doing the weekly fees, CPA charge, being able to just automatically pull. That's obviously been a big game changer to not have, grow to 12 million without any AR. But yeah, some of those things that are, very impactful for us.
Yeah.
And I'll switch it back to you, Tom.
And Jake, you mentioned this, but I'll ask you. And Chris said, hey, are you guys using a spreadsheet or a special pricing app? And Jake mentioned this. We do use a spreadsheet for this tool and he was showing you an example of what that was doing in there. Yep. So these are the different areas that we have gone through. I know it's probably a lot of information. I think it was really good information, and these are, for the most part, building blocks around, make sure you know the service offerings. And from that question, it was a mix of people. Most people were saying, no, we don't have defined service offerings, or they were giving a bit of a caveat. For some people we do, they need to be developed. That's really important to allow you to then go through and say, how do I want to price that? And then market toward that you're consistently talking about all those different things. And then you've got a pricing tool that supports back to those packages. You can imagine if you didn't have those packages developed, how do you do pricing for that? At least not in a simple way that then clients could actually stare at on the screen and understand what they're looking at. So in addition to this information, we have some tools that we would like to leave you with. One is this free price development worksheet that we talked about. So you got a QR code, you're going to get the slides, or you can scan this later, but we'd like to offer this to you as just an example of what we have done. I think Jake talking about what is behind it is really important. We have a lot of people saying, can I have your pricing tool? And yes, these are the kind of things we share, but if you don't really have the concept behind it, then it's not a very valuable tool because it needs to work within your way of delivering services. We hope people want to keep learning. I mentioned the Modern CPA Success Show. Adam Hale and I am both co-host this and have a lot of topics similar to today, but we will bring in guests and people internally and talk about mainly advisory service kinds of topics. So something I think people can get a lot out of. And we'll also talk about a way that you can get CPE for listening to these. Offering another webinar that we have done, how would you launch a virtual CFO practice? And so that's one that Jody and I did together. And so I hope people would be interested in that. We've also mentioned the course. So we have a 24 CPE credit course. You can see more than 180 people have registered to take this course. And this is very comprehensive. You'll actually get the pricing tool, modules of everything that we do. As you complete the course, we do coaching sessions with people, and that's free. And then we also host a weekly meeting where people can come in and talk about their experiences and then ask questions during that, and I facilitate that. So something I think is a really good offering that we have. And potentially you look at all that and say, I don't think I want to do it on my own, but I would rather join your team. You guys seem like pretty cool people. And so we are looking for people to join our team and would love for you to contact us that way. Jake, Jody, thank you very much for today. Any final questions that you saw or comments you want to make before we close out today?
Saw something about software for clients. Do we how do we recommend and how do we price it? So if it's a software that's for us to what we feel like we need to effectively deliver our service, let's say like forecasting or cash flow management, that's baked into our pricing, baked into our service, that if they have that, then we're going to cover the cost of that. If it's something that's kind of integral to the business that the business needs, even if they're not working with us per se, like the accounting platform, typically like QBO fees, like we want the client to go ahead and just pay directly for that. Bill.com for like accounts payable, we want the client to set that up and pay for that. So that's typically how we structure it. Trying to keep the administrative piece of that as minimal as possible. We've been able to grow to a pretty big size with only basically one admin person, with having the weekly fees and trying to not really manage all this extra software fee stuff as much as we can. That's how we typically approach it.
Yep. Excellent. Thank you guys for helping us with our presentation today, and I hope everyone has a great day. Take care.
Thank you.